Alright traders, Brian here with another installment on the B4 indicator. We're going to call this one the B4 Maximus. Let's get started. Alright, the purpose of this video is to demonstrate how I'm currently using the different aspects of the B4 V3 indicator, and also to provide concepts that I'm using that foster deeper layers of thought and other perspectives from other traders. So any feedback from the community out there is appreciated. Disclaimer, I am not a B4 programmer or coder, nor am I a B4 expert. I did not create the B4 indicator. Credit goes to the B4 trading community and those creators behind it. Agenda for today is what is the B4 V3 indicator, and then I'm going to walk through these three concepts. Alright, first off the bat, B4 V3 is different than the B4 indicator you can download from the B4 trading community. They offer their B4 indicator for free. You just can't manipulate, or the ones I've downloaded, you can't manipulate any of the code in it. So this V3 has been altered in what I call the secondary markets out there to enable us access to some of the parameter settings, and that's what I use because I can adjust it to my trading style. So here's where I currently have the B4 V3 set to. The fib super trend length is set to 21. MACD length is default at 5. Fast length default to 12. Slow length increased to 81. Bollinger Band length increased to 33. Number of deviations increased to 1.5. Okay, everything else is default. I did change the midline on the Bollinger Band down here to reflect a dash line, and I thickened it up a little bit. Okay, so the B4 indicator V3, well, both versions paints the bars per your color preference, but the V3 indicator will enable you to go in there and change the color code if to suit your preference. You know, I currently do not use the color code in the B4 indicator. I use markers to color my bars with different momentum settings in there, so I have another dimension, you know, at the trend analysis. The feature that I really like about the B4 is that it provides the green-red directional triangles when the MACD breaks out of its Bollinger Bands. And the new feature that I've just recently activated is it provides a green and dark red vertical line when the fib super trend breaks out. We're going to talk about those in the subsequent slides. Can be downloaded in our futures, the Blockchain Cartel Discord room, or at the Elite Futures Discord room. Just look for the B4 V3 _1.zip folder, and that's the one I'm working with. If you want to change your bar colors, just follow these step-by-step instructions, and you'll be able to change the color codes to suit your viewing pleasure. Alright, concept one. We've already talked about the jiggle in previous PDFs. But I'm going to go over the relaxed parameters. So the B4 V3 is comprised of many built-in indicators, and I'm only going to talk about the ones that are important to my current trading plan. So the main function is the MACD and Bollinger Bands, and when the MACD gets outside of its Bollinger Bands, it exhibits momentum, prints a directional triangle. During a pullback, when the MACD comes back inside the bands, I'm looking and waiting for a reversal back. So a strong valid trend continuation entry occurs when the MACD reverses inside the Bollinger Band without puncturing the Bollinger Band on the other side. See the example. Okay, so in this example, on the bearish trend, we come down, we get outside, the MACD starts printing red outside of the Bollinger Bands. We get the down triangles. Okay, it gives a little one bar pullback here, reverses down, we get the other red down triangle. But I'm looking for a move inside the Bollinger Band, so at least a 2 bar pullback we get inside the Bollinger Bands, and we reverse back down without puncturing this side. Okay, same thing here. We get outside, we reverse in, we pull back inside, reverse back down, and that's where I like to get in my trades. Same thing for the bullish trades. We get outside the MACD Bollinger Bands, we pull back inside the bands, we reverse back up, I get in, we have another reversal back down, we do not violate this low, so I'll add a second contract right there. So that's typically what we're looking at in this in these bearish and bullish B4 jiggles with the relaxed standards. So with the relaxed parameters, I'm getting fewer up and down triangles. So here we have red down triangle, BLT trigger lines are bearish, we get a 1 bar pullback. I'm not really interested in those, I want 2 bars or more. Here we start getting the pullback, we do not get a green up triangle, so the reversal back down is where I want to get in. Okay, so as long as we've got red pullback, 2 bar pullback or more, no green, it's a valid jiggle trade, you take it. All right, we're still in a valid jiggle setup, but we get a second one right here where it pulls back outside the bands, 2 bar pullback, no green up triangle, close down, I'm in. Okay, on the bullish side, we get double prints over here, we wait till things get bullish, we get the crossover, we get the pullback, comes inside, we're still no red down triangle, so we take the up close. We get the pullback, no red down triangle, we take the pullback. Okay, that's all it is to it. All right, concept 2 is fib super trend. I just recently incorporated this and activated it inside the thing. Kind of like it. The fib super trend is just another, it's similar, not exact, but it's similar to the super trend indicator we're all familiar with. I'm not going to go into calculations for this, I'll just call it the fib super trend breakout. So when a bearish fib super trend breakout occurs, we get the dark red vertical line. When it's bullish, the green vertical line. Okay, so my job as a pullback researcher and trader is to objectively quantify pullbacks in a way that makes sense to me, and this feature helps me accomplish that specific task. So the first technique of using the FST is just to take pullbacks in between the FST goalposts. Okay, so that would be on the bearish side. We don't get one here, we almost do. We get the red down, we get into a bearish trend, but we only get a 1 bar pullback. I'm looking for 2 bars still, even in this trend right here. And then so I wait, this is pure jiggle. We get the green here, so it's not in between the goalpost. So here we have the red down vertical line, we get a 2 bar pullback and close down, and that's what I call trading in between the goalposts. Okay, here we get one, we get the green, we wait till it gets bullish, the pullback occurs in the bullish up mode. We haven't gotten anything red yet, no dark red vertical line, so that up close, I take that. That's really all it is. So you can walk through this sequence here and it explains everything. So so the second way I use them is to objectively identify price when it's potentially stretched too far. So in a bearish trend, if during the pullback you get the bullish FST breakout, the green vertical line, but you do not have the red up triangle prior to the reversal bar back down, this could be overstretched and a nice reversal move back down could happen. All right, so let's take a look at this example. All right, so first example is we looked at just the pure trade between the goalposts, clean. Okay, we get the green here, price goes up, it pulls back inside of the bullish mode. As it's pulling back, we do not get the red, it up closes, and we just get in between the goalposts. Here we get the bullish or the bearish breakdown, the boundary here where the real downtrend starts. We get the up move, and then right now I'm thinking I've got a clean jiggle, but then all of a sudden, hey, I get the green vertical line. So now I'm waiting to see if I get an up triangle. If I get an up triangle, it completely negates this setup. Doesn't negate a potential short trade later, it just negates this potential setup. All right, so we get the up move, and then I'm waiting. I'm trailing price down. I'm using the Ninzarenko bar status, trailing price down at the close plus a tick, and we get the close down. It gets stopped in right here, and we get a little bit of jiggle back and forth, but then she rocks and rolls to the downside. I easily get my 5 points out of that. So that's what that refers to there. Okay, two good clean examples of two techniques to use the fib super trend. Okay. Concept 3 is just simply confluence, and that's using the trade between the goalposts combined with the B4 jiggle. So you've already seen it, so I'm just going to breeze right through this, walk you through it. So we're in a well-defined bearish trend. We get a red vertical line, down triangle, 2-bar pullback, close down, enter. Simple. Okay. Over here on the bullish side, we get 1 and 2 simultaneously. We get the green vertical strike, the up triangle. We get another up triangle here. So that's 2 alpha. So we already got 2 met. So now we have 2 alpha. And here we get the pullback, 4-bar pullback, and it's combined with the second bullish breakout of the FST. So you just take that trade. So it's combined with, you get the green vertical line, up triangle, pullback, no red, dark red vertical triangle. So you just take that close. So that's combined with the jiggle and the FST. All right, so that's basic explanation of how this works right here. Now I'm just going to walk you through some real life examples, because of course this is a well chosen example where I can in one chart demonstrate everything to you. But let's go to some just raw real world price action. Now I've got the bars here, just no color code, just so you can see the pure price action and not be influenced by bar coloring. All right, so we roll back, and what we are looking for is this right here. Here's one. All right, we get the green up. Over here we get the green vertical line, FST breakout, up arrow, pull back. We come back inside MACD. We do not puncture the other side. We take that up close plus a tick. We come back down. It tests that low and then takes off. All right, you got the same thing here. You still have a jiggle trade. You're up 1 plus tick. Do I get 5 bars? 1, 2, 3, 4, 5. Yep, that's 5 points right there, right to the tick. So, whether or not you'd have gotten filled on that on the exit or not, unknown. But I would have, worst case, I would have lost 3 ticks on that trade. Okay, worst case. Best case, I would have had my 5 points. All right, so let's go back here again. Look. All right, so here is another. Yep, another example. Green. I mean, you have the example here as well, but I'm waiting. I'm just showing you the bullish stuff. So green vertical stripe, up triangle. So we're waiting for the pullback. We get it. We're in. And, honestly, I'd have lost on that trade right there. But we get a re-entry. It doesn't get outside of the bounds here, so I take that trade, and we're good. We come back again, another re-entry, and we take that trade, and you get your 5 points there. All right, so let's look at some down stuff. Here's, you get them almost simultaneously, vertical line down, red down arrow. You come in, you take the trade. Yeah, I would have lost on that one right there. You would have probably, yeah, here's another one where Whether I would have gotten in on that or not, I don't know. That's right at my entry point. So I'll say I would have gotten in and would have probably lost on that trade as well. So that's probably 2 in a row right there that with my entry techniques that potentially would have lost on. So you can see, preferably you get these at the start of the trend is what I'm going from the end of the trend, working my way back. That's not how we trade. So I'm definitely looking for the ones at the start of the trend. But anyway, I'm just going to show them to you. Okay, so we get this all automatically at the same time the trigger lines cross over. So we're waiting for the pullback. Perfect entry, and you go. All right, here you have the stretched too far potential, and look what happens. It's a good example. The dark red vertical line, down arrow, we get the pullback, we get the vertical line, I'm in. Okay, stop up here somewhere. We pull back, we get another vertical line. It doesn't take me out. At this point in time, I'm thinking it's going to come up and take me out. But also, if I survive, I've got a resting order in to get in for a second contract down here. And look what happens. So potentially stretched too far, really nice move down, but I'm looking for my 5 points. Okay. Yeah, here's just some more that just work. Green line, up triangle, pull back, no red, down triangle, enter 5. Pull back, enter 5. Okay, you just keep, I could roll back through these and just keep going all day, but I think you get the gist of this right now. So anyway, hopefully this helps. Hopefully you can incorporate this into your trading plan and maybe make try to get 1% better. That's what I try to do every week. And hey, I'd like to wish everybody good luck in their trading. And until next time, this is Brian signing out.